Good evening, everyone. We will begin the meeting. Good evening. Thank you all for attending the 2025 tax classification hearing. We are pleased to have members of the public, city councilors, and city department participation. The city councilors have received final certification from the Department of Revenue, Division of Local Services, certifying values for the city. 2025 was a 5-year recertification for the city of Holyoke. During a revaluation year, the assessors must revalue all real and personal properties. Revaluation requires the verification, analysis, and use of arm's-length sales. Sales from 2022 and 2023 were used to value residential class, commercial and industrial class, and vacant land. A certification review was conducted by the Bureau of Local Assessments to ensure proposed values were derived using a methodology based on general accepted mass appraisal practices, which are supported with current market evidence and are uniformly and equitably applied to all properties. Data quality, cost and depreciation tables, and land schedules were reviewed for all real property. In addition, income-producing property was reviewed for income and expense analysis, development of economic rent schedules, capitalization rates, and correlation of values derived from 2 appraisal approaches. Personal property accounts were reviewed for appropriate listing and valuation, along with cost and depreciation tables. As well as this, the assessors completed inspections of real property, verifying building permits, sales inspections, and valuation changes. Changes in the real estate market and sales drive the market up or down, thus increasing or decreasing assessed values. Residential values have increased again this year for 2025. The residential class has increased 16%, commercial class 10%, industrial class 6%, and personal property 5%. The total value of real and personal property has increased $386 million over 2024. The total value of real and personal property, hold on, excuse me. Don't want to repeat myself. With these increases, we see the value of the average single-family home at $284,000, an increase of $38,000, and the average 2-family home at $278,000, an increase of $38,000 as well. The national average of a single-family home in the United States is $420,000, and the average value of a single-family home in Massachusetts is $644,000. New growth for fiscal 2025 is $1.4 million, nearly double what it was in 2024. New growth for this year was attributed to the car wash, Valley Springs Nursing Facility, and lease of a partial space at a Bay State facility on Whitney Ave, and many properties changing from exempt to taxable on the commercial side. On the residential side, we had 11 new homes and growth from new additions, decks, pools, sheds, and other upgrades to properties, all discovered from permits and inspections. We also had an increase in personal property value. Our levy this year is $67,816,208, up $3,029,000 from 2024.
Can you move the microphone away from you? Yeah, we'll try it. Is there some static going on?
Okay. All right.
Okay.
Thank you.
It's us, it's not you.
That's okay. Thank you. Okay. The current levy calculates to a single tax rate of $22.33. This levy we may use will change when the auditor completes the figures on the tax rate recap. The job of the City Council is to select a shift factor. A percentage of the burden may shift from the residential class to the commercial industrial class. This meeting, at its conclusion, will be continued and reopened by the City Council in order to do this, thus changing the single tax rate to a split tax rate. We welcome any comments from the public and the City Council at this time.
few questions if you're.
Okay. Councilor Jordan?
Yeah, thank you. As always, I appreciate your office doing this presentation and for gathering us the information so we can do our job. We do appreciate it very much. Just a few questions. When we voted on the actual levy for FY24 last year, the rates that we adopted were based on a levy of $63,073,552.
Yes.
So when we go from the actual levy to what is the proposed levy that you now base the new rate chart, it's going from 63 million to $67.8 million.
Well, actually, it's going from what the actual levy was last year,
Right.
not what we used. So that's where I came up with the $3,029,000 difference. We have to go by the actual levy, not what we used. Just as this year, it will change by what we use for the levy instead of what is on paper.
What I'm pointing out, though, is that the proposal here on the table is to set the fiscal year 2025 subtotal here, this levy, which is proposed to be the potential levy limit for 2025, 67,816,208. Right.
That's our actual levy. That will differ when the auditor is done with her work.
Right. So you're not clear yet if all of that is needed at this point.
That is correct.
Okay.
I assume it is not,
Right.
so that will change. That's why I sent the email stating that this will change.
Right. So the question is, have you been given an estimate yet of what is probable to be needed?
I have not, because the auditor's still working on her certification and her documentation of numbers.
Okay. Do you anticipate we're going to have that pretty soon? Is the goal for us to vote on this relatively soon, this month?
Well, the council president tentatively set up a date for November 20th or 21st
Okay.
to set the tax rate. I am not sure if that's going to work with the timing of the auditor's office.
Okay.
She will be in contact with me and also Tessa to set a date.
Coordinate that. I just wanted to point out that if we did in fact use the full levy limit, though, that would be $4.8 million increase from what we're at today. If they used it all, which would be substantial, would be 8%
Right.
increase. Now, unclear at this point how much of that is needed, so it's a to be determined. But I will say that you did provide a rate chart based on the levy limit at
Yes.
the back of the page. And it would appear that based on what you've provided to us, that if we did even the maximum residential shift, it would be 1770 and 3908 would be the commercial rate. And currently, I believe we're paying $18.95 for residential today.
Yes.
And $40.26 for commercial.
Correct.
So if we did that, we would essentially have a comparable $1.25-ish off of each if that ended up being the actual levy that we end up using.
Correct.
Okay. I would note, though, that it appears, based on the numbers that you provided, that if that was the number that we ended up using, that would result, even using the maximum residential shift, that would put the average tax bill at $5,036.
Right. It would
So-
still result in an increase, even though the rate is lower, because the values are so high now.
Exactly, right, because you increased the values 15.6%, so the average tax bill would go up $373, which is quite substantial. It appears that the single-family homes have been going up about $200 a year, and if we did the full levy limit, then it would be $373, which is about double that rate. Let's see here. It looks like you're showing to us that the commercial to commercial, industrial, personal to residential shift 78% to 21 or 22%. Is that consistent with last year about the the total pie of residential, did it hang in there at about 78% again for this year? Or
I-
did that grow, if you know?
I don't have last year's, but hold on one second.
I do.
I know you do.
Oh, did you do?
I asked her for it.
Oh, nice. Okay.
Yeah, last year, the total combined residential, commercial, personal was 22.74%. So it's down a little bit this year.
22 points, so about 1%.
Yep,
More residential, less commercial.
correct.
Any major abatements over the course of this past year that were meaningful? That is to say, you know, greater than a tax abatement for any particular payer of, say, greater than $10,000?
I don't have my abatement sheet. I don't believe we had any that were significant. We did do a lot of abatements, though, that came out of our overlay, which cleared past delinquent taxes for personal property. The tax collector needed them cleared out, so our overlay was hit
As being
hard with those.
uncollectible- for being uncollected?
Right,
Okay.
correct.
Okay.
I'm sorry.
Okay.
Can you-
I'll stop there.
Can you
Thank you.
explain what you just said?
Yes, the tax collector was unable to collect certain personal property bills that have been in existence since 1999, and she had to have them cleared out. There are businesses that have closed that never paid their bills. We can't keep them on the books, so they had to be cleared and abated.
Okay, thank you.
Mhm.
Do you have any more questions?
No, I'm good, thank you.
Could I ask a few questions?
Sure, Councilor McGrath?
So I noticed that last year, the excess levy capacity was about 1.5 million, whereas this year it's 8.1. Could you just, for the record, just kind of walk through why that big shift from last year to this year?
The values,
Yeah, just because of the increased
Yep.
values, largely of residential property?
yes, correct.
Because they went up in general around 15%?
Yeah, they were 15.6%, 15.8.
And then you said that the increased, it looks like there's less industrial parcels.
Yes.
From last year to this year, but the overall value of the ones that we do have went up. And you said that was the car wash, a lease on a Whitney Ave Bay State property, and then you said something about a nursing home.
Yep, the Valley Springs Mental Health Facility on Lower Westfield Road.
And then you said there were 11 new homes. Where were those all in one development, or were those
No,
across the city?
across the city. That's a combination of single-family and two-family homes.
Okay. And I know that Mr. Jordan asked about abatements. I think sort of, one of the properties we've been tracking has been the mall. Has there been any discussion around valuations of the mall and sort of their prognosis?
The mall did not receive an abatement in 2024. We have been constantly working with the mall and their values and everything. They have decreased again this year.
Okay.
How much for this year did they decrease?
Yep. They have decreased 5 million.
What's their
5.3
total
million.
value? I think they have
Total
four
value of the
parcels.
mall right now is 110,560,000.
110, okay, thank you.
Okay. Thank you.
Any questions? Councilor Sullivan?
Yeah, thank you. Back probably a year ago, we were in the middle of kind of a data survey on the commercial properties,
Yep.
an accelerated program. I think we talked, it was going to be done over 3 years.
It's actually over 10 years that the state gives us to do those inspections, and we are in the process of doing them. We did some this year, we're doing a good chunk of them next year, and we will be following on a percentage basis every year.
Right, but it is still running on an accelerated basis on the commercial properties?
Accelerated as in the fact we have a vendor that will be doing inspections of the properties as well as Cheryl and I, yes.
Yeah. Okay, thank you.
You're welcome. Anyone else?
Not a other hand up. I did have
I
another.
don't, yeah, I'm checking online.
Okay, so obviously, year after year in recent history, we've been seeing the residential in particular go up quite a bit.
Yes.
I think this might be even, by our standards, very high, right? The 16%. I don't know if we've had a year where it's gone up that much in one particular year.
We have not.
This, huh?
We have not had
Yeah,
a year.
I think this might even of itself be a record. Wanted to ask you, where are we going in terms of the prognosis as you see the Holyoke residential and more broadly the county say? Is it the trend line starting to slow down so that
It is not slowing down.
Not slow-
For 2024 sales that we will be using for next year's valuation purposes, those sales are up again. They won't be up quite 16%, but there will be an increase again next year in values on single-family and multifamily residential. And most likely apartments as well.
Like, if you had to ballpark it, would you be thinking like it's 3%, 5%, 8%,
I would say between 3 and 5.
3 and 5? Okay. Is that something you think we should, as a community, reasonably expect for the foreseeable future? Is a 3 to 5% increased trend line, or what do you? I mean, you follow this a lot closer than we do. What are you hearing out there? Is it, starting to level off, or even? Yeah, it's
I
really hard.
don't see it leveling off for the next couple years because of the housing shortage.
Okay.
Housing is in demand, and
Right.
what's driving these values is the bidding wars of people desperate to get houses.
Interesting.
Hopefully, though, if you tie it in with the mortgage rates, maybe things will start to come down a slight bit.
Right. Are you, in terms of arm's length sales in the city, do you keep track of how many of those we have in a given year?
I do. I don't have that figure right now. I'd have to run the report.
Okay.
Most of them are non-arm's length sales
Okay.
because they're family sales, deed transfers, court divisions.
But for those, you only use the arm's length ones for this purpose.
We only use the arm lengths because that's the only
Yeah.
fair ones to use.
Exactly. It's competitive. About ballpark, how many do we have in a year usually here in Holyoke? Is it 100 sales? Is it 20 sales? Is it?
It has leveled off significantly.
Right.
One year we had almost 800 sales of single-family homes.
Wow.
This year it's a lot less, and Cheryl processes all the sales. Maybe she has an idea. No. Okay.
It's been,
Yeah.
Okay.
It's not, we were having 30 and 50 a week, and now it's really a lot less.
Okay. Maybe you could go back a couple years and kind of send that to us.
Sure.
You could follow. I'm just kind of curious as to what does that tell us about the residential base? It's basically sitting in place that people, there's a lot of things going on there. I've noticed, just again, not totally anecdotal in what I hear from constituents, people are more likely to fix their home up, less likely to move into something else. Either they're protecting low mortgage rates that they currently have, so we're having a lot less churn because if they bought something else, they're going to go from 3% to 7% type of situation.
All your assumptions are correct.
Yeah, exactly. So what I'm kind of interested, and what does that mean in terms of calculating this? So for example, if you go from having 800 sales and there's a much more competitive market out there, which means in the aggregate, you'll have one, less anomalies where you have high lows. Two, it's more competitive, which tends to drive price down. So if we're noticing a flattening of the number of sales to 30 or 40, say there's only one a week, right, going on in the city, or two a week, then it's going to elevate these. It's going to cause prices to go up because there's less competition.
That's
right?
correct. But in our analysis, we have to have so many sales in order to value whether the market's going up or down. If I only had If I didn't have enough in a certain category, I would have to expand my time frame of sales in order to make it fair.
You stay within Holyoke, though.
Oh, yes, within
you don't-
Holyoke.
You don't pick up Chicopee because you don't have enough or something?
No,
Okay.
no, we're not allowed to do that.
All right. But what you'll do is you'll use multiple years?
If we need to. Yep.
Extrapolate?
Like this year was a recertification year.
Okay.
Some of our land sales, we didn't have enough just in the time frame we're supposed to use. So we had to use 6 months prior and 6 months after as well.
Is it more the structures that's driving the 16%, or is land that the homes are on is tending to be obviously there's two components to the property
There's two
valuation.
components, yes.
So there's the building and then the land.
Right, there's the
It-
land schedules.
Is the building rising at a faster rate than the land, or is the land going up, or is it about the same?
I'm going to say about the same.
About the same.
The land sales are significantly increased. That then does increase a homeowner's land value on his parcel as well,
Right.
but not at the same significant rate that the vacant land increase is.
Right. And you pick up on building permits, right?
Yes.
Are you noticing those are trending up?
There's a lot more building permits.
Which seems to be consistent with what I'm hearing, which is people are fixing up their homes again rather than moving. Exactly,
Right.
especially since COVID, you're more likely, instead of moving, I'll remodel my kitchen or remodel
That's
my
correct.
bathroom type of thing. So now you get these building permits, and if somebody remodeled a bathroom or remodeled a kitchen, you do an inspection?
Yes,
or-
we do.
You do, okay. And then that would drive value.
That would drive the
Or
value
finish
up.
the basement
Right.
or other type of things.
Right.
Okay. And that's all baked into the cake here.
Yes, it is. And that trend has been going on since COVID,
Okay.
where people tried to make their homes more usable since they were home more. And then with the cost of the rising market, fixing up their homes is more beneficial.
Right. Are you finding that the sale prices are coming in fairly close to the valuations now, or are you still finding, a situation where it just blows your mind? Like, like for example, I think one time you and I talked about a property, I won't mention the street, but it was in the HCC area. And I remember one, I think they were I was just kind of curious because it kind of blew my mind. It sold for like $450 or something like that, but it was only assessed at like $250. And it was like, wow. So,
Yep.
obviously once you get that sale, you make the adjustment to the new person, but
We do. We try
are
to.
you still seeing that kind of a gap?
Yes, we are. There are bidding wars out there,
Interesting. Okay.
which are driving those values up. And when there's a sale, we have to do an inspection, and sometimes it's hard to justify the amount of the sale, and sometimes it just can't be done. Somebody's just that
Overpaying.
desperate or willing to pay for a house in order to get a house.
And now, do you take that into consideration? Like, say, for example, I'll take just a regular type of street, a beautiful street in our neighborhood that is right near my home, like Francis Avenue. Just a lot of great, nice single-family homes. They're all assessed, say, at ballpark $300,000, say, on that street. But then somebody gets desperate, and they just said, I don't give a damn. I'll just pay $400,000 to have this house, right, in one of these bidding wars. Does that end up hitting everybody else on the street by now they all go to 340, to compensate for the person who was over market?
That one sale does not.
Okay.
Many of those sales do. That's a valid arm's length sale between a willing buyer and a willing seller.
Right.
You have a lot of those, and that drives your market.
Okay.
So I'd have another, you done?
Oh, yeah, I'm done. Yeah, thank you.
Sure.
So I'd go back to my, the data survey and the, whether it's the outside firm that's helping out. But on the commercial side, so we had quite a bubble with the marijuana groups, and I'm still seeing quite a few of those properties out there that have, where they were assessed at 1.2 million but have sold for 4 million, and they're currently vacant, yet listed and advertised. And even in the sense of that, one of the prime examples is 111 Mosier Street at $5 million. So where are we on the curve is that as far as straightening out those values?
Well, those values are few and far between, but we look at every building, every sale we have. I can't look at what's on the market because I don't know what it's going to sell for. I
Right.
can only use verified sales to change my values unless I do an inspection and see something wrong with the building. There's certain things that influence the value of commercial buildings and the sale of commercial buildings and what people pay for them, though. A lot of times people are paying a higher price for a commercial building because of the use of the building, what future use they're doing on it. Sales of just the building, or sales of the business that's in the building, or sales of both. A lot of the high-price sales include account receivables or include debt to be paid. There's also personal property and equipment included with those sales, and sometimes they include stock options and financial assets. So it's very hard when we get into buildings that sell for an exorbitant amount or buildings that sell for a very low amount because of these other factors underlying it.
Yeah, and that's a prime example of the one example I'm using here is all the assets, machinery, jobs, everything left Hoyoke, all the personal property, all the receivables, all the billing, everything. It is now just a vacant shell, sold for a very high price. None of that other stuff was included. And then the new business never got off the ground, yet they're now asking an amount for sale for the building in excess of that. And it's sitting there as an empty shell with none of that going on at all. And so my question, on ones like that, where the business, the jobs, everything has been driven out of Hoyoke and it's now sitting there, are we able to identify them through the outside consultants, whatever, and
We're valuing the building. We're not valuing the business.
pardon, I didn't get,
We value the building,
right,
not the business that's in it.
okay. So in this example right now, what is it going to take to move that to a $4 million assessment?
We don't know. I'd have to look at that individual sale and what was components of it.
Okay. All right.
If there's not another question from somebody else, I'll wait, but I did
I
want to,
don't see one.
okay, I wanted to ask you about exemptions
Mm-hmm.
and how those are going. I wanted to ask particularly about senior exemptions. Are we using, at this point, all of our, or most of our state-allowed exemptions that we do get reimbursed for?
Yep.
Do you have any statistics on that you could share with us?
Yep, we are capped at our state limits for income, assets, age, and exemption amount on seniors.
Right.
There's nothing in the works that I know to change that in the future, but we will remain at the cap for it. The good news is a lot of seniors that apply do not qualify.
Right.
And
It's too
you
bad.
may think that's a bad thing, but it's a good thing that they don't qualify.
Right. In that they have,
Right.
allegedly more assets, but
Right.
of course, when you're even in the ballpark, in this inflationary world we live in, you're not doing that great. I will ask, though, we're allowed usually somewhere in the range of 250, 260 of these exemptions. How are we doing in terms of actually using the 250 or 260 that we get the state reimbursement for.
We're on the senior exemptions, we're very low.
Very
We're,
low.
we're not at our cap limit. It wasn't as high as 200 something. I think we were at, I don't know, 80 or 90, and we're lower than that. Yes.
That are using it or that we're allowed?
That we're allowed 80 or 90 people
Oh,
at the
we-
cap, but we don't
Used to
have
be a
that
lot
many.
more than that.
It used to be. It's the demographics.
Oh my goodness, that's interesting. Because yeah, I recall, because you and I know particularly have been keeping an eye on this over many years, couple decades, and yeah, we used to get a lot more. And I know we give a larger exemption than the law fully reimburse for obvious reasons, but so we're only allowed 80-ish or so. Is this a thing where we should do another, G&E insert advertisement type of thing to get the word out? If, or do you feel at this point people have a good handle either through the senior center or other ways that this is available to them?
We have the ongoing program with the Hoyle Gas and Electric where it's put in their bill twice a year.
Oh, excellent. Okay.
Right.
Good.
It goes in January and towards July so that when they get their bills,
Okay.
they
That's
know
fine.
they contact us.
Okay.
That's a great program, and the girl that runs it there is always checking with me and updating the records for it.
Yep.
So
How are we doing with like veteran exemptions and some of the other ones? There's been a big push through a number of state programs and other things that this council's adopted and our Veteran Services Office has facilitated. Are you noticing an uptick in people taking advantage of these exemptions?
no, the veterans are still at the same level, basically.
Okay.
They are the best ones at applying for their exemption. As soon as they get it in the mail, they apply right away instead of delaying. We're not quite at the level we used to be for reimbursement of those either.
Okay.
I don't know if there's fewer veterans now based on everything that's happened
Right.
in the past years. It's less people serving, people not being drafted. We have less veterans now. But we do have a couple new ones every few years.
Okay.
So that's good. And the HERO Act is the information I sent you,
Right. Yes,
which
we
would
have that.
greatly benefit these veterans. And in mentioning them, many of these veterans that are qualifying for the veterans exemption are our senior homeowners as well.
Right.
They can't get
You
two
only get
exemptions,
one.
but they can get the better of the two.
Right.
So with the increase,
I think it's 1,000 now, right, for the veteran
right,
one?
with the increase of the veterans exemptions, we may see some of the people shift away from the senior exemption into the veteran one, which would greater benefit them.
Are you noticing we're getting a strong and full participation in the senior tax work-off program? Are you generally, we getting enough volunteers to sign up for that one too?
That's all administered through the Council on Aging, not through us. The only thing we do for the senior work-off program or the veteran work-off program is verify home ownership.
Okay. You don't track whether they're actually being used or not. And now somebody sends a slip to what
The Council
tax
on
collector
Aging.
does it to the tax collector to know to take it off the people's bill? Is
No,
that how
the
that
Council on Aging keeps track of the hours the people work, and
Right.
they send us the list again at the end of the year, telling us which people qualify or did all their hours, and then we put the abatement on the bill.
Okay, so then
It's not an exemption, it's an abatement. We take off the bill before the bill is run, or if they finish their hours after the actual tax bill is run, we do the abatement then.
So we've generally provided for approximately 30 of these, I believe, ballpark. Are the 30 being used approximately right now? based
Yeah,
on-
they use their limit every year.
Okay, good. Good, that's what we want. That's,
I believe they have more applicants than they take, but
okay, all right, good.
you would have to ask Neve at the senior center that.
Right, but if you're at least tracking the abatements, you'll know it,
Right.
if they're being used or not.
The veterans utilize all of their slots too.
Good, excellent.
Anyone else, any questions?
Just a suggestion, on the table that shows the the tax, the CIP shift.
Yep,
It bottoms out at a residential rate of 1770 and a commercial rate of 3908.
yep.
Myself, I already see one somewhere else on the list that I'd be in favor of, but we have some counselors, I think, that might want to see it continuing on down to the current commercial rate of, what is it, 4026, just to give a
It
full.
can't continue on to that. The 1.75 is all we are allowed to go.
That is the most,
That is the maximum shift we can do. With our values the way they are, these values using our current levy that I've shown you
Yep,
give us a single tax rate of $22.33.
yep,
The shift amount you elect to shift away from residential towards commercial is your residential factor. That determines your rate. The 1.75 is as high as we're allowed to go. What I do anticipate, though, is we may not need this entire levy amount, which is why I'm waiting for the auditor to complete her work and tell us what the levy amount we need to use is. And when she does that, I will be rerunning all of this. And that will affect the single tax rate and your shifts. And everything will be different at that point. If we're using a lower levy than this, our single tax rate's going to go lower than $22.33. Thus, your shift percentages are all going to go lower too. Our business rate is not going to be over $40.
no, I know that, right.
Yeah.
All right, thank you.
You're welcome. Is that it?
I got,
We will call it a meeting then. Thank you all for coming.
Thank you.
Thank anyone online for listening in. And we will let you know as soon as we have new numbers for you.
Thank you so much.